All right, everybody, welcome to another episode of the 360 Executive Suites podcast. My name is Ed Masterson. I'm the host for these shows. I'm a certified life coach here in Santa Clarita. Honored to be hosting these shows. First of all, I hope you all notice how cool our intro music is right there. And I have a great guest today. I'll be introducing him in just a moment. But before I do that, I want to thank Mr. Fred Arnold of 360 Executive Suites. Fred has helped us create this podcast studio where we get to interview really terrific people that are part of our business community, nonprofit community, excuse me, and people that are making things happen here in Santa Clarita. This studio is located in the building just on the old road that at one time was the RE/MAX headquarters. So a lot of you would know that by sight driving up and down the freeway. One of the great things Fred has here in the building is the new home center where you can come in, get together with some of Fred's staff here on property, and they can walk you through all the information that's available in case you are considering purchasing a home or you just want to start getting preliminary information. The new home center here at the 360 Executive Suites on the old road, 25101 the old road, is your place to come for some fantastic information. Also, 360 Executive Suites is a terrific home away from home for you if you have a business and you don't want to work out of your home and you need a place outside the house. This is a terrific option also. Fred has 4 state-of-the-art properties here in Santa Clarita. The great thing about working at 360 Executive Suites, if you do have an office there, is the vibe when you come into all of those buildings. Great camaraderie. There's a lot of collaboration between the different people that have offices and companies in the buildings. It's a very friendly, fun environment, great relationship building. So again, if you're looking for a business home away from home, 360 Executive Suites is a fantastic choice. We'll put up a contact slide at the end of this episode and you can get in touch with Fred or some of his staff at the various properties you might like to check out. So thank you for letting me talk about all that. And now my guest today is Mr. Logan Allec, who is with Choice Tax Relief. And I'm really glad he's on the show today. Allec, thanks for joining us. The reason I'm glad is because when it comes to taxes, I think I'm probably like most people in the general public. It's kind of a world that I don't know enough about. It's a little scary to me. We always try to keep our fingers crossed at the end of the year when we do our taxes that it's going to work out. Maybe we get some money back. But first of all, thanks for coming on the show. It's great to have you here.
Thanks, Ed.
And maybe you can just kind of fill us in on Choice Tax Relief and how you got it started, and then we can, ask some other questions after that.
Yeah, for sure. So Choice Tax Relief is not your traditional CPA firm. We're a tax relief firm. We help people who have tax problems, big tax problems. How big is big? We typically help people who have at least $10,000 in back tax debt with either the IRS or their state. We come in there, we represent them under power of attorney. We do all the dealing, all the talking, all the negotiating with the IRS or the state on our client's behalf. We are led by myself. I'm the founder and owner. We also have a qualified tax attorney on staff and an IRS enrolled agent, as well as various administrative and support staff. So basically, we go to bat for our clients against the IRS.
Okay, so as you said, if I understood correctly, I wouldn't come to you to say, hey, can you help me file my taxes? I'm coming to you if I've ended up in some kind of situation that's detrimental to me.
That's exactly it. So we do have very qualified tax preparers because sometimes people have to file back taxes, for example. They've gotten behind. That's one thing we specialize in. But our main business model isn't that traditional CPA. You come in, you give him your documents, he or she does your taxes, and then off you go until next year. We help people who have found themselves in some unfortunate tax situation where they're owing thousands, tens of thousands, hundreds of thousands of dollars. Some of our clients owe millions of dollars to the IRS or their estate. So that's who we serve.
And I think, first of all, it's great that how long have you had the business going?
So I've had it just as myself for about 7 years now.
Okay.
I formed the corporation, hired staff to help me out once I started just getting too much work. That was about 4 years ago. So just as myself, about 7 years, but kind of building out the team for about the last 4 years now.
When I was looking through your website, a couple things caught my eye on there, which, when I was reading it, I thought, I wonder if I read that correctly, or is that too good to be true? Is it possible in some situations when people have gotten themselves into a predicament, let's say where they owe money, that there are some, I'm calling it tactics, that may not be the right word, but procedures or tactics that you guys are able to help people out with? For example, I'm using, I think, the example on the website. If I owed $300,000 in taxes, Is there some sort of clock that runs that at some point you may end up through the skill of you helping people uh, reduce that amount, say from 300,000 down to a much lesser amount, and then have a payment plan that you can actually afford to pay off? Walk me through that, because that really caught my eye.
Yeah, absolutely. So there are ways that you can lower your tax debt with the IRS. Now, just as a caveat, because there's a lot of unscrupulous people in this industry who make crazy claims that we can, get your debt reduced to pennies on the dollar. That's not an option necessarily for everybody. Not everybody's going to be able to reduce their $300,000 of tax debt to $50 or something like that. But there are some things we can pursue. One thing we look at right off the bat is any penalties that can be written off or abated by the IRS. When someone is struggling with tax debt for years, they often have maybe half or more of their balance with the IRS is by that point penalties and interest. And if we can negotiate some kind of penalty abatement, either in full or in part with the IRS, that can significantly reduce their balance into something that's more workable in a payment plan. Some of our clients qualify for something called an offer in compromise. This is actually an agreement with the government to sell your tax debt for less than you owe. It's kind of a means-tested thing. It's based on your financial situation. In simple terms, the more the less able you're able to pay the IRS, the more likely they're willing to cut a deal with you on your back taxes. So those are the main two ways you can get your tax liability down: penalty abatement and the offer and compromise program.
So again, if I'm understanding correctly, let's say that I had good success financially for years and years, and I made a lot of money, and I kind of was delinquent getting my taxes paid. A bunch of taxes pile up. Now there's penalties on them because I haven't paid them. If at some point in the future I then become somebody that does not have an income stream and I am not doing well anymore, that makes it more likely for them to look at the reality of my current situation and say, we're never going to get the $500,000 this guy owes us. Let's get something. Is that the idea?
Yeah, it's kind of, the government wants something rather than nothing. So a typical offer and compromise scenario is just that. Maybe a business owner has had a business for many years. At the tail end of that, they've gotten behind on their taxes. Now maybe they lost their business, or maybe they simply retired and didn't have a big exit or anything on that business. So now they're living off fixed income or some, they're bringing less cash flow in than when they had the business. They're an example of someone who'd be a good candidate for the offer in compromise program. It's not only folks like that, though. Recently, a Hollywood actor, Charlie Sheen, he qualified for an offer in compromise. He had $7 million of tax debt, and no, it didn't get reduced down to $1,000, but it got cut in half from about $7 million to about $3 million. So it's all relative, I guess you could say.
That's a pretty significant cut down.
Yeah.
Half. That's amazing. Speaking of the IRS, again, anecdotally throughout my lifetime, the IRS is always this organization to be feared because of, they can sort of come in and manipulate your life in a bad way. Is that true, or has that changed a little bit over the years?
So obviously there's some rhetoric kind of with the new administration that maybe we'll talk about a little bit later. But yeah, the IRS is one of the only folks you can owe money to who can garnish your wages, who can levy your bank account without needing a court order. They have to give you sufficient notice to do that. But unlike most creditors, they don't need to go through the court system to start taking your stuff. So they are the nation's most powerful collection agency. They have pretty awesome powers when it comes to extracting money from those in their targets. So they are an agency to be feared if you find themselves in their target.
Okay, so the ads I hear about the newer, kinder, gentler IRS are not necessarily true.
No, that is a good point, though. We have not seen this anything official from the IRS, but we believe that one of the IRS's more recent tactics is to sound very nice initially with taxpayers over the phone or in that initial contact.
Right.
But don't be deceived. Their goal is to get as much money from you as possible. So they are kind of changing that, how they treat taxpayers, but they can kind of twist the knife there at the end to get what they want out of you.
So let's say you're in a predicament like that with the IRS, and I come to you, for example, for help. Are you able to somehow, in my mind, I'm picturing this where you can put some kind of a stop on the IRS from like coming in and draining my bank account or leaning my house or whatever it is? Is that what you guys are able to do sometimes?
Yeah, so sometimes people come to us and they do have that copy of that notice that was sent to their employer where the IRS told their employer, hey, don't pay you, pay us, and leave you a very small amount of money. That's called a wage garnishment or a wage levy. There are tools and things we have in our pocket to fight that even after that notice has gone to the employer. We can show the IRS that this wage levy will cause you financial hardship, that you're not able to afford it because it will cause you some kind of economic hardship to yourself or your family. We can show that, even if you're not in that situation, that the IRS should agree to some small payment plan to release the levy, where instead of having to give the IRS 70, 80% of your paycheck, you can make them some reasonable monthly payment every month. We can also try to show that the levy was improper, that the IRS did not take the proper procedural steps. They did not give you due process in the levy process. So there's various ways to attack a situation like that.
Because the IRS is such a powerful and feared agency, kind of the way you're detailing it, do they sometimes not play by the rules exactly? And can you catch them and trip them up on stuff like that?
Yes, you can, especially when they perceive that they're dealing with an unsophisticated taxpayer. So it's often the case that when we send in our power of attorney to the IRS that has me on there, I'm a CPA, it has a tax attorney on there, my tax attorney Andrea, it has my IRS enrolled agent Leah on there. They know that they're dealing with experienced people, and now they'll start playing by the rules. Another thing on that note is simply IRS incompetence. Maybe they're not intentionally trying to not play by the rules, but because of incompetent personnel at the IRS, they're not. And if we can catch that, we can work that in the best interest of our clients.
Yeah, well, that's good to know. I mean, because I think people raised in a certain generation, I'm putting myself in that, right? Some baby boomer generation. When I grew up, you sort of are respectful / afraid of government agencies. And if they say something that you did wrong, you're like, oops, I better fix that or else. It's good to know, though, that, Logan, that you've got this company that can't, because that would be a scary situation, I think, to get that letter, even if, we want to thumb our nose at the government. Like if you get that letter in the mail, that could be very frightening and disconcerting. And of course, to your point about if they did start, garnishing your wages and they weren't coming to you anymore, instead they're taking them directly, that could put you into an even bigger financial tailspin, right? I mean,
oh yeah. I mean, once the government it's those wage levies that are so scary, because it's not the IRS telling you to pay up anymore. It's telling your employer to pay the IRS. Oh, and if the employer doesn't comply, the IRS can go after the employer. It can be absolutely devastating because the IRS sees themselves as the entity you need to pay first. You need to pay the IRS before you pay, your credit card bill. You need to pay the IRS before you pay anybody else. That's how they view themselves, and it's a very scary place to be when now an employer, or if you're a business owner, and the IRS sees that someone sends you 1099s for work that you do, they can send those same notices to those folks, which can really hurt the reputation of your business. Right? Because you have all these customers that you have. I got this notice from the IRS saying, Logan, he can't even get his finances in order to pay the IRS. I mean, that can be a very detrimental look, not just the fact that they have to pay the IRS now, but also in terms of your customers' trust in you as a business owner.
Well, yeah, that would be my next question. I'm assuming then the IRS can never be sued or litigated against by regular people, or is that not true?
So they can. They can. There is actually a forum called the United States Tax Court, in which tax attorneys like Andrea on my team can file petitions against the IRS. If the administrative negotiations just directly with regular IRS employees kind of go off course, or we can't reach a resolution, taxpayers do have the right to petition the United States Tax Court and fight the IRS in court. Thankfully, most of the time when we file an IRS petition on behalf of our clients, it doesn't usually go to litigation. Usually there is some settlement before the actual tax court process. But it is nice having a tax attorney on staff, because when negotiating with us, when the IRS negotiates with us, they have to weigh the hazards of litigation. That is the cost of going to trial.
Does the IRS in those situations, do they ever, get snotty with you and sort of try to use any kind of intimidating tactics, or do they know your company, and once they see somebody like you with your background and your credentials and all the, the great things that people say about you guys, do they then say, okay, to your point, okay, we're dealing with a guy who knows this game, we got to play the right way?
Yeah, usually when they perceive that they're dealing with a competent CPA or tax attorney, they will usually put their thinking hats on and make sure they're playing by the rules. So as opposed to when they're talking to taxpayers, sometimes they will not play by the rules. And that's one benefit of having a professional in your corner if you're dealing with the IRS.
What would you say keeps most people from coming to somebody like you, Logan? Like, in other words, would it be, to your point earlier, there's commercials out there maybe from groups that are not doing good work like you do, excuse me, or people just being unaware of the fact that organizations like you exist, or fear? What would be because it sounds like anybody with a tax issue would benefit from engaging your services. So what would keep people from contacting you to help them?
I don't know, because we offer a free consultation, and sometimes those free consultations are extremely helpful. But I think there is kind of an impression of the tax relief industry from some of these, unscrupulous companies out there that may or may not have ripped people off. There's kind of a reputation in the industry that unfortunately some players have cast on the industry. But there are great companies like mine, Choice Tax Relief. There's other great tax relief companies out there. There's independent tax lawyers and CPAs who do this stuff, that it would really benefit anyone with a tax problem to at least get a free consultation and hear what may or may not be possible in that situation.
Tell me about your YouTube channel. How long have you had that going on?
Oh, man. So I've had the YouTube channel, it must be over 7 years now. I'm posting every day on there because there's no real resource out there for people who owe the IRS money. There's a ton of stuff online for tax deductions and tax credits. I feel like every major article publishes some of those articles every tax season. But I looked out on the landscape of online content. I didn't see any resource, any library of content to answer people's questions who aren't just wondering how they can, get the child tax credit or something, but what to do when you owe the IRS or your state a lot of money. What are your rights? How can you fight this? So 7 days a week, I publish on my YouTube channel. It's just my name, Logan Allec. So, yeah.
Do you do most of your business in California, or because nowadays you can do stuff for people in other areas? So
Yeah, it's nationwide.
Okay.
I would say that our client base is probably just follows the distribution of folks around the country. Everything we do is virtual, and that's really great technology-wise.
Are there some states, and since we live in California, is California better or worse than some other states when it comes to being more lenient or understanding with people in tax situations?
Oh, man. The California Franchise Tax Board is one of the worst. We would rather negotiate with the IRS than the California FTB.
Wow.
California actually has 3 units in charge of taxes. There's the FTB for income taxes. There's the CDTFA for sales taxes, and there's the EDD for payroll taxes. All those entities, oh man, they're very difficult to deal with. I don't want to speak necessarily to their competence, because there are some sharp professionals and attorneys we've spoken with there, but sometimes that can be a factor in getting a case resolved. They're also very harsh towards taxpayers. We think the IRS has, in the last few years, tried to put up a kind of a nicer face up front with taxpayers to kind of like draw them in. Sometimes as California entities, they can just be rude from the get-go. So they can be, they're very difficult to deal with, the California tax boards. They're something.
Sorry to hear that. Yeah, I guess we've been lucky over the years. We've been able to, most of the time get a refund on our tax return. We say my wife and I have been married for almost 40 years. But we've always been pretty lucky. We've only had to pay a couple times over the years. But there was one time when we got a letter saying that something was under, review or whatever. It was no big deal, but it was unnerving to get a letter from the IRS.
It's always unnerving when you get that letter and it says the IRS. I mean, I get those sometimes, and I'm like, wow, did I do something wrong? And usually it's just, you changed your address or something, because I've been at 3 of Fred's offices so far. So usually it can be something as innocuous as that, or it can be something that you really need to take care of immediately. So I would say if you got a stack of IRS letters laying around, open them, read them. If it's something threatening, consult a qualified professional.
Right. That was what I was going to say. It's not the kind of thing that goes away if you just don't open up the mail, right? So to your point, better to contact somebody like you.
Right.
What got you into because I know you're a CPA as well. Was that your first major profession? And then from that, you sort of added then this whole thing for Choice Tax Relief?
Yeah. So I was a normal CPA for about 9 years. I worked at a big 4 accounting firm in the tax department. I worked at a smaller regional accounting firm. I think of about 1,000 employees in the Los Angeles area, kind of cutting my teeth on those basics, the tax returns and quarterly payments and tax planning and S corps and C corps and kind of that very, that normal CPA stuff that there's, every Main Street CPA kind of knows. Somewhere along the way, I started a personal finance blog that started generating ranking in Google and started generating leads or pertain to tax debt. So I noticed I could rank for tax debt content. I was like, well, okay, let me try to monetize this. So I was able to generate the leads, and then I would sell them to reputable tax relief companies. And then back in 2018, that's when I got the idea of, hey, I can just start my own tax relief company.
Right.
So in 2018 is when I left my job at a Big Four accounting firm and started representing taxpayers who had tax debt on my own. And then a few years after that, I started, Choice Tax Relief Inc. and, hired an attorney and an EA and a bunch of tax preparers. And then it's kind of just been off to the races since then.
If you don't mind me asking, how does it work? Let's say I engage your services. We sit down and you sort of map out a strategy based on my situation. Is that basically how it goes? Then how do people pay for that? How does that work? How would I pay for it?
Yeah, so we do have options. I mean, most of our clients just do pay with a credit card. We can generally carry folks if they need a few months to pay us. We can break that up. We also have financing partners. If people need a longer period of time to pay us, longer than their case will last, 3 years, 5 years, we do have financing partners that can finance the client so that everybody's happy. We get our payment up front. The client then pays the financing company, and we can work their case, even though they're just paying a small monthly payment to the financing company.
That's helpful.
Yeah.
And I'm guessing, obviously, every case is different and has different nuances to it. Do some cases take years to get figured out?
Oh yeah, I mean, especially if there's tax court involved, especially if there's litigation, it can take years. So some cases can be wrapped up in a few months. Some cases do take years. Yeah.
What's the most frustrating thing for you in the business you own, and when you're doing all this work? Are there any key frustrations you face?
I mean, one common frustration that we hear amongst taxpayers that we experience as well is just getting through to the IRS. I do pay a substantial amount of money every month to kind of skip the line talking to the IRS, but sometimes that doesn't work. And so that can hold up cases a bit if the IRS just isn't picking up their phone, or if someone out there has tried to call the IRS recently. Sometimes you do get somebody and then they just hang up, the call gets disconnected, and you have to get in line again and wait for a long time. So that's a common frustration, definitely, that we have. That speaks somewhat to kind of staffing levels at the IRS. That can be kind of a political issue, especially in recent times. But that is one of the most frustrating things when we want to talk to somebody about the IRS on behalf of our client, but the IRS is making that very difficult for us to do. But because we have a fiduciary duty to our client, we will keep calling and stay on the line until we can actually talk to somebody.
Is that the best method of communication, like our emails with them?
No. They love phones and they love faxes.
Wow.
Yes. So it's, if you get an email from somebody purporting to be the IRS, it's probably a scam. I mean, sometimes when we're actually working a case, the IRS, there might be a revenue officer asks us to email something, but generally it's phone and fax with the IRS. Yeah.
Do you think that's a reflection of slow moving, adapting to more modern techniques, or it's deliberate, it's on purpose?
So yeah, we kind of go back and forth on that. I mean, a lot of the technology at the IRS is very, very old, and there's no doubt about that. But at the same time, I think the IRS knows that if a taxpayer needs to fax something to the IRS to move their case along, it might be an enormous hassle for the taxpayer to fax something to the IRS because they don't have a fax machine anymore and they have it in 20 years. So I don't want to, accuse the IRS of anything, read into their motivations there, but it is very interesting that while other government organizations have moved to more of an email-based system, the IRS does live in fax world.
That's funny. So speaking of recent developments and, administration changes and all that, how has there been some really impactful things that you experience in your business as a result of that, or not yet? Or is it going to be kind of business as usual? What do you think?
Yeah, not yet. We're going to have to wait and see. We know the IRS this week is laying off thousands of its probationary employees. That's just a recent development. We know the administration has made some comments about replacing the income tax with a tariff-based system, about potentially abolishing the IRS, period. I think some of that is just kind of just a rhetoric to kind of get attention. But I do think that there is a real intent by the administration currently to reduce income taxes for folks, which is a good thing, and also shrink the federal workforce, not just the IRS, but shrink the federal workforce significantly. In my opinion, that will result in more of the IRS's collections being automated. The bad thing about that is because the IRS doesn't have the best technology. Sometimes that can go off course very quickly. So we're going to have to wait and see what happens with the IRS, with collections and things like that as this administration keeps moving forward.
If the workforce gets reduced, like we're hearing about, and either not as much or more, depending on what actually happens, how does that, if I'm sitting at the IRS and they say, okay, 1/3 of the workforce is gone now, does that mean, and this shouldn't give me any false sense of security if I'm a person that has a tax issue with them, but would I say to myself, well, they have 1/3 less people, I'm willing to roll the dice and let them just try to catch up to me at some point? Is it inevitable that they will catch up to me at some point?
So to be quite honest, I think the people who may be being able to kind of wipe their brow a little bit and say, are people with very complex cases, very complex tax cheats. Because a lot of the cuts are going to be on the enforcement side. So the very sophisticated taxpayers who have a ton of trusts and a ton of foreign entities to kind of escape the government's overview, they may be getting a break here. But just the everyday person who's a W-2 employee and maybe they went exempt and now they're behind on their taxes, the IRS can deal with that fairly easily, even with its antiquated technology, without actual people.
Okay.
Though the automated it's called the automated collection system. It's just the IRS can look at this person owes us money. We're going to automatically generate a notice, send it to the taxpayer's employer. The taxpayer's employer has to comply. It can be done without a lot of people there. Where a lot of the people are necessary are the phone lines, that front line, right, which can be very frustrating if they're not picking up the phones, and auditors of complex business organizations and high net worth individuals.
Did I see something also on your website about helping people with student loan debt, or no?
No, that does play into some of our calculations when it comes to like whether a taxpayer should file jointly or separately. But yeah, we don't really touch the student loan debt aspect. I think that's probably on my personal finance site. I do promote some. I used to promote student loan refinancing companies that could get people's debt down to a lower rate. But that's kind of that business. It's not part of choice tax relief. Yeah.
That would be getting a lower rate on the interest, not necessarily reducing the overall amount.
Right. And now with higher interest rates now overall, we're seeing less of that. So, yeah.
What would you say, Logan, and I know you talk to people all the time on your YouTube channel, so what's your best advice to people? Like if you again, even as friendly as you are and you're so great and all this great information, I still think people might have some trepidation about stepping into it. Although, do you find that people sometimes get caught between fear of the IRS, knowing they have to do something, but then just, paralyzed about making a decision one way or the other, and they just kind of cross their fingers and hope it goes away?
Yeah, it's kind of that head in the sand thing. And, with any kind of problem, not just tax or financial, but any kind of problem that's usually not the best approach to tackle something is by digging your hand in the sand and not dealing with it. I found in my experience as a business owner in other areas of my life that the best thing to do is to deal with it, deal with the issue. And if it feels overwhelming, like something that you can't deal with, emotionally, that's why there's competent professionals who can deal with the issue for you. So that would be my advice to someone who finds himself in that situation.
Yeah, no, it sounds like you are kind of a godsend and a lifeline for people that, end up stuck in those situations. Just again, anecdotally, do you find that when people do end up in these really massive amounts of money owed to the government, is that typically somebody who put their head in the sand and just kept going along, or is it some catastrophic event that happened and then all of a sudden the income they had is no longer there and now they're stuck? How do people dig themselves into that much debt? And how are they allowed to keep going long enough to build up several $1 million in debt to the government? How does that happen?
Right. So Yeah, there's one end of the spectrum. Our clients who owe several million dollars to the government. They're either high net worth people who are able to accumulate that debt in a relatively short span of time,
Mhm.
or they were business owners who with a payroll tax debt problem. Sorry, I got a cough. Sorry.
No, it's okay.
Where should I start? Just answer the question again.
Oh, no, I was just saying, when I hear, for example, about.
Or I know should I go back to the initial? Or
No,
just
no,
go
you're
on?
good.
Okay.
No, just go on. Yep.
Or they're business owners who find themselves cash strapped. And one of the easiest things to do as a business owner, if you have cash flow problems, is withhold those taxes out of your employee's paycheck, but not send them into the government. So that's just a knee-jerk reaction that many small business owners have, and those can accumulate very, very quickly. Because it's not just your individual tax debt that maybe the government is looking for. They want you to pay your quarterly payments, but they really want it by April. These are your payroll taxes, which for some businesses, the government wants to see you depositing those weekly because they know how quickly that can snowball. Because it's not just your taxes, it's the taxes of your 20, 50, employees that you have. That can grow very, very quickly, and they could rack up hundreds of thousands of tax debt just with those unpaid payroll taxes in the span of a year. So another component here, how people have kind of, well, then on the other end of the spectrum, we do have those people who something just happened in life where they got behind. This could be a divorce or just a very, a death in the family, just something very traumatic where their entire life was on hold. It could be a financial event, loss of a job, loss of a business, something like that. Where life just happened to them and they needed to put a roof over their head for themselves and their family. They had to put food on the table, and paying taxes was just not a priority at the time. So kind of at the other end of the spectrum, kind of the everyday person, not the business owner with lots of employees, not the high net worth person. It's usually people like that. It's not really no fault of their own, why they got in this situation, but, they did. And unfortunately, often the IRS doesn't see it that way. And they're going to go after, that individual just like they're going to go after anybody else. There is something in terms of how long the IRS has let people kind of get behind. COVID has had kind of an impact on that because the IRS was shut down for a couple years during COVID. They weren't sending out any collections notices. Actually, it wasn't until just last February 2024, when the IRS started sending collections notices again, those real nasty ones. So that did delay processes a lot at the IRS. So, and of course, we're going to see what happens here in the near future with the new administration.
Is it correct to say that sometimes the initial debt that you owe to the IRS relatively may not be that bad, but allowing it to not be paid and allowing fees and fines and penalties to pile up on it, do sometimes those penalties and fees become the worser element of that problem?
Oh yeah, especially with older debt, it's those penalties and interest. It can end up being half of your balance to the IRS. They can be extremely significant, and they wouldn't rack up, or at least wouldn't rack up as much, if the issue was just dealt with initially in a proper manner.
How about, so I feel like during COVID, a lot of things, I used to work in an event production company here in town, and we do, special events. A lot of the guys that worked for us back then were working as DJs or maybe lighting guys, things like that. And they, in addition to working with us, Monday through Friday and being kind of on payroll, they would also do different gigs here and there on the weekends and stuff like that. Once COVID came around and there was, I forget what the law was in Sacramento that got passed, but it kind of put more onus on people in those types of positions like 1099 employees to have, to create some sort of official business for themselves, have insurance, other things that maybe they were getting by without for a long time. Is the 1099 world a equally complicated tax world, less or more? Like people that get paid 1099, is that a trickier world?
Yeah, I would say if I had to make a blanket statement, it's a trickier tax situation when you're 1099, because even if you just view yourself as a gig worker or not, a business owner, the IRS views you as a business owner and therefore more sophisticated than maybe the person just with a W-2 job where the employer takes taxes out, they file their return, someone like that. So the IRS is already viewing you as a business owner. And the onus is now on you to pay your own taxes, right? When you're an employee, unless you go exempt or something, your employer is going to be taking those taxes out of every paycheck. So there's kind of an automatic check on your budget. But if you're a business owner, and you got all this money at the end of the month and you go spend it all, there's no real check on you until you file your tax return and you're like, oh my goodness, I owe the IRS, 10, 20, 50, 100, whatever, however much money it is. So there is some more complexity. There's some more things to think about, definitely as a 1099 individual.
So first of all, I'm sorry we didn't have water here for you. That's a mental note for me to.
Okay.
We're doing the cheapskate podcast with no water. Sorry about that. What are some things I'm not thinking to ask you about because I just don't know to ask them? What are some crucial things that you think it's good to make sure we get out during this stuff?
So I would say one crucial thing as you think about IRS debt is that compared to other forms of debt, the IRS will generally go after you a bit harder. For example, they can go after your employer, go after your bank accounts. Other debtors, other creditors, they're gonna have to go through the court system generally before they can touch that stuff. So if you're kind of prioritizing your debts right now, oh man, what am I gonna tackle first? I would say you should prioritize your tax debt. Another thing I would say, and we kind of touched on this earlier, but don't believe all those tax relief company ads that kind of promise that they're going to be able to sell your debt out for some really low amount. You may qualify for something like that, but more realistically, what a resolution game plan is going to be is getting those penalties down as low as we can, and then working out some payment plan with the IRS, because the IRS, they're going to want to be paid maybe $3,000 a month. But if we can get that down to say, hey, the taxpayer can only afford to realistically pay you $500 a month, then that's a win. And sometimes we can get that payment down low enough such that some of your tax debt will fall off at the end of the 10 years, the IRS's 10-year statute of limitations. We haven't really talked about that, but this is an interesting thing that taxpayers are very curious about sometimes. From the date the IRS assesses the tax, it only has 10 years to collect that tax, and we can use that against the IRS. Now, they're going to do their best to collect within those 10 years. Don't get me wrong, bank levies, wage garnishments, things like that. So don't just think you can necessarily outrun the clock. But sometimes we have a situation where, okay, this individual owes a lot of money to the IRS. The IRS isn't going to accept a settlement because maybe they have a lot of equity in their home or something. But maybe we can get the IRS to agree to some kind of low dollar amount payment plan where we can show, hey, this individual can only afford to pay you $100 a month. And if there's only 6 years left, let's say, on the IRS's 10-year time limit to collect, and they owe, $100,000, let's say, let's kind of do some back of the napkin math here. Okay, they're paying $100 a month. That's $1,200 a year. Over the next 6 years, that's $7,200 on their $100,000 or even $1 million of tax debt. That's kind of a backdoor settlement, a backdoor way of settling one with the IRS that is not the official offer and compromise program. The unfortunate thing about a lot of these shops that advertise the settlements and things on the radio and TV is that they just submit an offer and compromise for everybody, a settlement offer for everybody, whether or not they're qualified. They don't look at these other options that can get just as good a result, but are more likely to be approved by the IRS. So that's where having a good tax attorney or CPA or EA who's experienced in these matters, having one of those folks in your corner is can make the difference between paying the IRS everything back or paying the IRS just a percentage back.
Okay. And before I let you go, I just want to make sure I get this piece. In any given year, let's say in a given year, I owe $10,000 in tax to the IRS. Is it a year by year by year, 10-year fall off, or at any given so in other words, if you're owing money to the IRS every year, and some years you pay it and others you don't, do they go back and tag the year that you didn't as the start of the clock?
Each year has its own clock.
Okay.
So it's 10 years from the date the tax is assessed. So, let's say if you file your 2024 tax return here in April 2025, the IRS will probably assess the tax. That means officially recording it on the government's books, probably sometime in May. So for your 2024 tax liability, the IRS's 10-year clock starts in May 2025. The tax will drop off in May 2035. Now let's say you go to file your next year tax return, 2025. File it in April 2026, assessed in May 2026. That tax debt will drop off in May 2036. Every year, and this is kind of some technical speak, this is a freebie, has its own CSED, collection statute expiration date. So if you're trying to DIY this, and I wouldn't recommend it, but if you're trying to kind of DIY this stuff and figure this stuff out, knowing the CSED date, the collection statute expiration date for each tax year, is a vital piece of information that we use for our clients to strategize how best to deal with their tax debt.
So if I walk in and I say, Logan, I owe $100,000 right now, and I owe that because over the last 10 years, on average, I've owed $10,000 a year that I have not been paying. You can't drop off all 10 years of it at one time. You would have to go year by year by year. And theoretically, then it's that 1 year of, say, $10,000 from 10 years ago that you would be trying to get reduced as much as possible. Let's say that we go into year 11. What happens to that first year? I still owe it on paper, right? The $10,000 from year one.
So it'll be written off. You look at your account transcript. You can pull your account transcript for each year from the IRS. There's a code on there, write off of balance due.
So that first year, once I get to year 11,
Yeah.
the first year, if I still owed that 10,000 technically, they would say it's a lost cause. Just write it off.
Exactly. Now, there are things they can do, and this is where the court system can be involved. They can reduce your assessment to a judgment and then get that extended. So but they only do that for big dollar amounts if it's in the best interest of the government to go through that costly court process. But for most folks, if they hit that 10-year clock, the tax is literally written off the government's books. Now, there are some exceptions to that. There's some things that can extend that 10-year time limit. Filing for bankruptcy will extend it during the pendency of the bankruptcy plus 6 months. Filing for an offer in compromise actually extends it for a bit. There are things that can extend that 10-year clock, but that 10-year clock, and not every tax relief company, frankly, I don't think even knows about this, or if they do, aren't going to disclose it. But that 10-year clock is a vital piece of information for each tax year. So whenever we do our first call with the IRS about a case, we are asking the IRS, all right, according to your calculations, the IRS, what is the CSED, the 10-year time limit drop-off date for each year the taxpayer owes? And then we do our own calculation. Because TIGTA, the Treasury Inspector General for Tax Administration, actually did some research on this a couple years ago. They find out that they took a sample, and they determined that about 20 to 30% of the IRS's internally calculated drop-off dates were incorrect. So that's why it's important that you or your tax professional do your own calculation of those drop-off dates. And the reason they're incorrect is because there's things that can extend the statute. And sometimes the IRS would consider those periods of extension longer than they should have. So I'm probably getting a little too technical here, but this is the kinds of things that a qualified professional will think through and really earn your business if they know what they're doing in the tax relief space.
First of all, thank you for explaining that. And again, last question, I promise. I could sit here with you for hours. During that 10-year example that I used, where I accumulate $10,000 of debt each year, am I being put through the ringer those whole 10 years by the IRS? Do I have to have the stamina to keep not feeling like I'm going to jail that whole time to outlast the clock?
Yes. I mean, because the IRS does, believe it or not, tend to prioritize that older tax debt that's kind of coming up on that limit. There's specific sections of the Internal Revenue Manual, which is the IRS's guidance to its own collections employees, about what to do, how to treat a case if there's an imminent statute expiration. So the closer you get to that drop-off date, the harder the IRS will generally go off of you. And this kind of feeds into people's thought process. Well, I didn't pay last year. I didn't pay the year before. They didn't come after me. I mean, they will likely before the 8 or 9 or 10-year mark, but they do prioritize those debts that are going to drop off.
Got it.
Pretty hard because it's literally going to drop off. I mean, the IRS can't go after it again. Another interesting thing is that states generally have a longer statute. For example, California, there's a 20-year statute.
Oh.
And that plays into negotiations as well, because with an offer in compromise or anything, for example, IRS knows they only have 10 years to collect the debt. States know they have 20 years. It becomes a different conversation, which is probably why the states like California can be a little bit more gruff.
Wow. Logan, I can't thank you enough for coming in today. First of all, really, really appreciate you spending this much time. And secondly, this information is just unbelievable. It's great to speak to somebody who is so knowledgeable and so successful in what you're doing. And the beauty of it is you're helping people when it's all said and done. And obviously you have a kind heart. And even though you're successful and you're a sharp business guy, I think that you must have got into this, a lot of it, just for feeling empathy for people that need help.
Oh, yeah. I mean, I had a family member that had a big tax problem that was taking over their life. And they did actually get those notices to their employer.
Yeah.
And they were one of the first people that I helped out when I started. And it just so happened that around that time that I was starting to do this myself and stopped selling the leads, this person got that notice. So I think of that today because I know they shared things with me about what they're going through when they got that notice, because they're family. And I think, wow, people who are coming to us in that situation, they're experiencing those same emotions. They're looking at their kids wondering, wow, are we going to be able to live in this house? Or are we going to have to go out, into low income or something like that. Right. And those are just very, very sad things, sad emotions that people have to go through. So yeah, there's a very human side of this work as well.
Again, can't thank you enough. Thank you so much for coming in. Could I impose on you to come back at some point? Because I'm sure things change every year, right?
Yeah, no, I love talking about this stuff. I love talking about taxes. Yeah, those yearly changes, they're usually on the tax prep side. And we have some of the best tax preparers in town. We don't really advertise that because that's not our main business model.
Yeah.
But yeah, I could always come in and talk taxes, talk shop.
That'd be great. Okay. Well, thank you again. Really, it was so
Sure thing,
eye-opening and fantastic. It was a great conversation. And all of you, thanks for tuning in as well. And don't forget, we're going to put a contact slide up here in just a moment where if you are interested in getting some space at one of the 360 Executive Suites locations here in Santa Clarita, 4 of them to choose from, or if you want to come check in and visit the new home center here in the building and get some updated information about purchasing a home or just start getting some intel about homes in general, if that's something that's on your radar down the road. So again, Logan, thank you so much, and we will be out. Thank you.